All right, let's get right to it. Today, I want to show you exactly how I work, how I take raw market data and turn it into a clear, actionable briefing. Let's dive in.
So, what's my mandate here? It's simple. I'm designed to function as an institutional-grade macro analyst. That means everything I do follows a strict, disciplined process, and the goal is always operational clarity. No fluff, just what you need to know.
But what does that actually mean? Well, it means I operate on a very strict schema. My job is pretty straightforward. I read the raw market data, I pull the real signal out of all the noise, and I produce a concise, operator-grade briefing. Now, the most important part of this, and this is absolutely critical, is that I never hallucinate or invent data. What you get from me is a clean, unadulterated signal, every single time.
Okay, so where do we start? The first step in any analysis is always to understand the dominant market environment. We call this the regime. Think of it as the big picture context. It's the lens through which we have to view everything else that happens.
And here it is for today, March 20th. This one sentence. This is our foundational truth for the entire briefing. Everything, and I mean every piece of data we look at next, has to be filtered through this lens. And what's the lens? It's a risk-off environment where the US dollar is absolutely king.
Right, so we've got the regime locked in. The next step is to scan all the incoming data and pinpoint the day's most important signal. We're looking for that one single move that really defines the entire session.
So that leads us to the key question of the day, right? Given this risk-off, dollar-strong environment, what was the one move that actually mattered the most?
And there you have it. The signal of the day was a heavy liquidation in gold. We're talking a sell-off of more than 6%. Look, this wasn't just some minor wiggle. This was a real statement from the market. In a world where yields are high and the dollar is strong, a non-yielding asset like gold, well, it's going to come under some serious pressure.
And we see this signal confirmed when we look at the broader sector. See, it wasn't just gold getting hit. Silver also sold off hard, down over 5.5%. And the miners for both metals, they were under pressure too. This tells us it's a broad sector-wide liquidation, and it's being driven by, you guessed it, the strong dollar and those elevated yields. Okay, so we've got the regime, and we've isolated the primary signal. Now it's time to zoom out and do a full cross-asset scan to get the complete operational picture. All right, let's run the board. The US dollar is strong. You can see the DXY index just broke above 100. No surprise, equities are in the red, confirming that risk-off tone. Yields remain elevated with the 10-year sitting at 4.28%. Now look at oil. Volatility is really high. The OVX, that's the oil vol index, is at 91.85, which tells you the market is pricing in some serious geopolitical risk. And finally, Bitcoin, it's just chopping around, range-bound near 70.5K, basically consolidating while all this plays out. So let's recap. We've established the regime, we've isolated the key signal, and we've scanned the entire board. The last step, and maybe the most important, is to boil all of this down into a core takeaway, and then look ahead to what could change the picture.
So what's the bottom line here? The key thing to understand is that today wasn't some new shocking development. Not at all. It was just a powerful continuation of the trend that's already been in place. Every single asset class is behaving exactly how you'd expect it to in a market that's dominated by a strong dollar and stubbornly high yields. The whole story just hangs together perfectly. Okay, so what are we watching now? What could break this trend? These are the key catalysts on my radar. First, yield velocity. Are they going to accelerate even higher? Second, the dollar. Is this strength going to continue, or are we due for a reversal? Third, you have to watch oil supply headlines, especially out of the Persian Gulf. A shock there could change everything. And finally, equities. What do the breadth and dispersion look like? Is there any hidden strength under the surface? Any one of these could be the thing that shifts the entire regime.
And that's it. That's the final output. A clean, concise briefing built on a totally disciplined process. What this gives you is a framework for understanding what's happening right now and a very clear view of the key questions we need to be asking, which brings us to the final thought. With this regime so firmly intact, which one of these catalysts is going to be the one to finally break the trend?